Expectations for further gains in Iraqi oil production have fallen victim to the country's deteriorating finances and struggle with Islamic State militancy. In a January report anticipating new financial assistance, the International Monetary Fund projected Iraqi oil output in 2020 at 5.7 million barrels a day. A follow-up report in July put the number at 4.4 million barrels a day, only 200,000 barrels a day above the average rate it expects this year. Increasing oil production as previously envisaged would require a doubling of oil investment, which the Iraqi authorities recognize as infeasible given the fiscal outlook, IMF explained. In addition to lowering its expectations for oil output and exports, IMF trimmed its projection for gross domestic product, citing further weakening of the non-oil economy. The organization nevertheless approved a $5.34 billion three-year loan under strict conditions that include payment of overdue obligations to international oil companies. Arrears had climbed to $4.67 billion at the end of March from a little over $3.5 billion in December. IMF wants Iraq to clear those accounts by the end of this year and meet all obligations to the oil companies quarterly as stipulated in service contracts. The new loan follows a rapid financing instrument disbursement of $1.24 billion by IMF in July 2015. It broadly requires managing external pressures, such as by maintaining the exchange rate pegged to the US dollar, removing exchange restrictions, and fighting money laundering and terrorism finance. It requires implementing fiscal consolidation while protecting the poor. It requires strengthening public financial management and curbing corruption. And it requires monitoring financial risks to preserve financial sector stability. This is a tough program for a politically fractious country with a 23% poverty rate, 4 million people displaced by violence, and 10 million people, 27% of the population, needing humanitarian help. Under difficult and dangerous conditions, the Iraqi oil industry has raised production to its current level from 3 million barrels a day in 2013. But a fiscal trap aggravated by low oil prices, persistent violence, and political dysfunction will prevent the further gains the country needs and has the geology to achieve. I'm Bob Tippie, editor of Oil and Gas Journal, and that's the editor's perspective, which appeared first in text at www.ogj.com on September 23, 2016.